But I think this is what Powell wants. He wants to see the market go down. He wants all the markets to go down, and they are going down. So he's getting what he wants for the moment.
Special coverage of the New Orleans Investment Conference is brought to you by Victoria Gold, leading Yukon's new gold rush.
Welcome back to the New Orleans Investment Conference, SF Live special coverage. My name's Kai Hoffmann. I'm the @JR Mining guy on Twitter and the CEO of the Soar Financial Group. And I have two fantastic guests here today, Pamela and Marianne Aden Forecast, over 40 years in the newsletter business. It's a pleasure to meet you. I'm German, so it's like this is the first time we're meeting. Yes. So I had to ask some ignorant questions when we just met, just like introduce yourselves and things like that. So, but you're a fixture here at this conference. Like you've been working with Brian and Jim Blanchard even before then.
Yes.
So let's start off with a different question we haven't talked about. It just came to mind is like, how has this conference changed over the last 40 years?
Well, that's a good one because basically the fundamentals are still the same. And the formality is still the same. And maybe there was a lot more like Mardi Gras at the time. But no, I would say it's maintained a very good standard.
Yeah. Absolutely. Yes. The speakers here is like, I'm blown away by the speakers here at this conference.
That's always been what the signature of this conference is, the speakers and the quality and the formality.
Yeah. Yes. The theme of the day, the always very timely. As well.
Well, perfect timing. Like since you bring it up, like timely, we had a CPI print just yesterday.
Yes.
Right. So that dominated conversation here, obviously as well. Another good question as well, just to sort of ease into the conversation, is like buzzwords. Like you've been here at the conference now. You've had conversations with investors, panelists. What is something that sort of stood out and one of the key buzzwords that you've been hearing?
Well, a lot of people are in the Federal Reserve. Everyone's wanting to know what they're going to do or not do. So that's a big deal. And like you mentioned, the CPI is still high. We expected it's going to stay high for quite a while. But in the meantime, everyone is very concerned about if the Fed is going to back off a bit, or if they're just going to keep raising rates. And Powell has said he's going to keep raising them. So that's pretty much what everyone's talking about.
Yeah, I think it's interesting that 40 years ago, Paul Volcker killed inflation by raising rates to 20%, and inflation was at 15%. So now, 40 years later, Powell kind of has a similar thing, and he is going the Volcker route, like saying, we're going to kill inflation or whatever it takes, we're going to have some pain. So everyone's fearful of that. But what this interesting thing is, he's taking rates from zero after the last 10 years and moving them up out of that really historical low area, and we think it's changed a mega trend. The 40-year downtrend of interest rates has changed. It's now, we think this is a mega change, and they're going to start heading up continuously, like not moderately, but continuously, like the trend has changed.
Absolutely, I agree with that. Do you have a ceiling in mind? Like, that's something all the investors want to know. Like, I've been asking a lot of my panelists and guests here as well. Like, is there a Fed fund rate target that makes sense?
Well, it's hard for that because it's coming from such a low area. And right now it's in that semi-low area now, no more extra low area. Like when the 10-year went up to above 3.5%, we think that was one, and 30-year, especially now getting close to 4%. That is a major trend change. So that means that what's really worrying to people is the fact that it's rising and no end in sight. When does it over? Like that's what worries people. But once it levels out, which it will at some point, whatever level that is, will make people settle down because they'll start understanding what they have to deal with. But until then, there's a lot of fear, uncertainty, and they think, the markets, are they even free anymore? Where's value? What happened to that?
Yeah.
There's a lot of doubt and fear going on this year.
How realistic is 4.5% as a target rate?
That's realistic.
Oh, yeah, that's very realistic.
But, to answer your question is that, for example, if they just raise it to the inflation rate, you're talking 8%, and the Fed is very doubtful. It would go to 8 to 10, 12% interest rates. We just don't see that happening. And so if it got to 4 or 5, that is kind of taking baby steps, but that's probably what they'll end up doing.
Yeah. Well, Brian London gave a really interesting presentation on like sort of interest payments on the debt, and that there's is eventually going to be a ceiling because political pressure is also going to get too high,
right.
and servicing the debt is going to become a massive issue. We're talking $1 trillion here.
No, exactly.
Yeah, and since Trump said get them down back in 2019, was that 18? That was the last time that they were trying to raise it. Now they're back to raising it again, and it doesn't look like it can. Brian's that's absolutely true. Already, mortgage rates are hitting close to 7%, and they're at 15-year highs, and that's hurting the housing market. But I think this is what Powell wants. He wants to see the market go down. He wants all the markets to go down, and they are going down. So he's getting what he wants for the moment. So we'll have to see. That's where that word pivot has been very important, because everyone's talking about the pivot.
Yeah.
When is he going to pivot?
Well, letting out some air out of the balloon, I think, is not the worst thing.
Right.
Like we've seen some overheated valuations, especially
Yes.
in some of the stocks, trading at insane multiples that are not backed by anything.
Good morning, ladies.
Good morning, Rick. And yeah, sorry.
No, but going back to what you were saying about Brian, what he said was the truth. That at the point where the interest payments just, are just overtaking all the other expenses, which they pretty much are already there. I think they're already the third or fourth largest.
600 billion right now. I think
Yeah.
at 4.5. I think Brian did the math. Roughly $1 trillion.
Yes.
That's unheard. Like,
And they're going to keep rolling over to higher rates.
yeah, exactly. So if it keeps going higher, it's
At some point, they just can't go any higher.
Yeah.
At what level that'll be, I think, it's a guess, but it's coming up.
Yeah.
It's coming up.
Let me circle back to your presentation, Inflate or Die. Right? So I'm trying to figure out now how to fit that is like your title of the presentation into what we've just been discussing. Right? Being German, we've seen hyperinflation in the past,
Yes.
and we inflated our way of a very, very terrible deal and tried to get rid of our debt that
Yes.
way. Is that a way to do it? Is that am I misinterpreting the title of your presentation?
Interesting thing is that the U.S. has been doing that. That's why the inflate or die has been embedded. Like our dear friend Richard Russell, that he coined that phrase, inflate or die, because he feels the Fed has no other choice, and so that was his coin. But it is true that over the last 20 years. We haven't. The Fed has taken the stance of kick the can down the road. When they see the stock market falling and recession starting to peak up and grow, they immediately create money and get the economy back on track. And then all is well. They did that in 2000 and 2008. And so this is still a possibility. He's fighting it.
Yeah.
But he may not have a choice. So that's all the ifs that are in the future.
But
to go back to inflate or die, is that just what we were talking about, that the situation is that you have to keep inflating, because if you try to do a Volcker type move and raise interest rates to 15% to be able to kill the inflation and really bring it down, that's not going to happen. So they go as far as they can, then they pivot, or the economy will die. So it's that's basically in a simplified
It could be
way.
a compromise in the end.
Yeah.
Get the rates up to 4 or 5%, and then agree that it's okay if we have 4 or 5% inflation.
I think they've been
not 2.
I think they've been signaling like the word pivot. The question just came to mind as well. It always for me like symbolizes something aggressive, meaning it's like a sudden change in direction. Right, that pivot. But how about just staying at 4.5% for the next 3 years?
That's
Yes.
probably what
So
they're
that's not a
gonna
pivot anymore. That's
No.
like
No, that's exactly
sort
what
of
people
like,
need.
and then they maybe even go lower in 3 years, but that's not a pivot anymore,
No.
right?
No, that's
so,
a gradual. And that's
So-
where it looks like
Probably what we'll see.
there'll be a happy medium. You can bet he wants to do what he has to do. And so that sounds more realistic.
That's sort of what.
And once it goes sideways, wherever it may land, is going to be the beginning of okay.
You're my first guest, sort of, that haven't mentioned crash, great reset, doom and gloom, right? So it's really a refreshing conversation. But what are some of the key takeaways from the presentation that you want investors to leave the room with after?
Well, we are bullish on gold. We think the U.S. dollar is near a top. We think it's gone way overextended. The major dollar trend has been down for 50 years, but it's been going up the last few years. But it's way overextended at this point, so it's approaching a top. I think it will turn down and continue on its downtrend. And at that point, we think gold will be very good. In the meantime, so we are bullish on gold. In the meantime, with stocks and bonds, they're under downward pressure. They're in stocks especially very, very weak as long as interest rates are going up. So we would kind of keep that at a minimum or avoid them. And then cash has been the best investment this year.
Yeah.
So
Despite the inflationary pressures.
Yes.
Yeah, that would have been your best investment, is just holding dollars.
Yeah, absolutely. Just the DXY going up as well, and the basket against the other basket of currencies. I think you would have outperformed everything else. Absolutely. Yeah.
Right.
I think
So
the dollar is up 15% year to date. I think it is. So.
Yeah, it's incredible.
That's,
Yeah, because
and I'm European, right? So it hurts coming out here.
yes,
So.
I bet.
Painful.
Yeah, I can imagine it is painful.
So no, fantastic conversation. Like, I really love that. Thanks so much for coming on. Where can we find more of you?
Well, we have a website, adenforecast.com, and if they want information, info@adenforecast.com, and we'd be happy to give your listeners a free copy.
There we go. Perfect. You heard it. Fantastic.
Yeah.
Pamela, Marianne, thank you so much for your time. Really appreciate it. Enjoy the rest
Thank
of the
you for having
conference.
us.
We'll catch up again very soon.
Thank you
and
very much.
everybody else, thank you so much for tuning in. SF Live here, special coverage from the New Orleans Investment Conference. I was joined by Pamela and Marianne Aden from the Aden Forecast. Make sure to check out the website. Also, you have a Twitter account, I've noticed. You need to put, no, there's one, I think. At the Aden Forecast. There's not a lot of followers. You need to work on that a little
Oh,
bit.
that's true. You're not using it, yeah.
No, but really enjoyed the conversation. Give them a like, give them a follow. They need some followers on Twitter. And give us a like and follow here on YouTube and Twitter as well. Thank you so much for tuning in, and we'll have lots more for you soon.
Okay.